Good evening, everybody. It is Sunday, February 16th, and we are going to do our COT report here for the data that came out on Friday, the 14th. Were you ready for the market to start to move outside and towards the upper end of our recent zone for the past month? Were you prepared for CPI and PPI this past week? Let's dive into the positioning ahead of our holiday shortened week and options expiration. Again, we always want to be following the money, following the flows that are coming into the market, and especially on a day-to-day basis, the insurance that's coming in or not for catalysts. And we'll review that this week as well in some of our intraday trades. First, a quick reminder that derivatives trading is inherently risky and past performance is not indicative of future returns. So if we dive in first to our positioning on the SPX, we notice that commercials have trimmed just a very little bit of their short position, but we're nowhere near our triggering levels. So we're going to have to wait for the ES to give us any signs from the cash index. But with that, we do see that commercials, and we'll dive into these two as well, that our 6E trade for the euro that we had laid out a couple weeks ago is starting to develop. And then we're also going to dive into natural gas, where commercials are at their least long that they've been in quite a while. So let's dive into our levels and how those played out this past week. If we start with looking at where the levels were when we opened the week, we were looking for rotational price action between 6,008 and 6141. And that proved very well as we did make our move right up into that 61, 41.5 to 46. And again, that 70 pivot that we had laid out last week danced around our line in the sand. It oscillated between 60.60 and 60.84 all week. And we can see those playing out as a key area, key level from not just daily, but from weekly. And once we got over that and then held on Thursday into Friday, we knew that 41 was the target. And that was laid out again from our weekly plan. And we will get into this week's levels as we go ahead. As we look at the past week, we did have a few of our common patterns playing out with the business flow model of insurance premiums. So ahead of CPI, we did not have insurance in the market. So this gave market makers free rein to shake people out. And you can see that on our daily prep video from Wednesday on the 12th, where we laid out the key points that we would see the market maker step in and that the lack of insurance was going to lead to that big bid right here at that 60.24 to 29 area. And this can help us to see who's actually in control of the market. Now, when we came into PPI, we were lacking insurance as well, and we knew that. So we were expecting a more muted move. And that's, again, what we saw. But let's look at some other days as well. So if we look at the 11th, we had laid out at 10 o'clock that insurance was bought for Powell's testimony, and we laid this out for our professional subscribers. And we were still waiting on more to come in for CPI. But again, that didn't come up. But how did this play out on Tuesday, the day before, with Powell's insurance? And then we saw that an hour later at 11:05, we mentioned that the insurance play was done and that the upside for that time was likely over. And what happened on the 11th? We posted 1 minute into this candle opening that the upside was now coming. And right when this candle at 11 o'clock was opening within the first 4 or 5 minutes, we said that this upside move was done and our next move is coming down. And so that was for a nice 30 to 40 point move up and then another 25 point back down. We did the same thing on the 13th, where one of our educators and group leaders is laying out that we are now not protected at all for Trump's speech on the 13th, on Thursday. And that was laid out at 10:44. At 10:45, the market topped and we had our next down move for about 30 points. And so we follow these flows regularly, not just our weekly levels, but intraday, how these plans can play out. So we laid out on the euro as well that we were going to likely see a move back up as the commercials were very long into the 6E, into the euro positioning. And this is the longest that we've seen them in multiple years. So this begins to give us a big signal in the market. But we don't just want to trade off one indicator. We want to see these key levels. So we laid this out for you a few weeks back and gave you the roadmap for the euro that our big levels were going to be this dollar 1.0385 and then 1.0495 would be the two, and we would look for our breakout over 1.05145. And this past week we saw a very nice long at our level that we laid out, that 1.0385, as we had several tests that held on Wednesday and Thursday for the move up to our next level. Now, for us to be looking for the next long, we need to hold this 1.0495. If we do that, then we are looking for a move up to 1.061 and eventually up to 1.08 is where we're going to really look for kind of an end target on this up move that will give the commercials the move to sell what they've bought for this campaign. And now if we turn our eyes to natural gas, again, we can see that commercials are at their least long that they've been in quite a while. And if we look back to how this typically plays out, when they're at their least long, they move the market lower. We stay consolidating or move the market lower to acquire product. And as we are now in this least long position, we are going to look for natural gas, NG, to stay between 3.718 and 3.374 this week, with a bigger favor to the downside under 3.374, and we'd look for 3.197 and 3.088 as the lower targets. Those are the areas that we will dial into, as well as some others as we actually get into trading this week. But since the S&P is not giving any clear signals just from our COT, we'll dial into our bigger picture levels and actually get into our intraday positioning, as that's going to matter more for right now. Once that positioning gets tilted and we get crowded in one direction or another, and the pain trade becomes very clear, then we can rely on our COT plans a little more for the S&P. Right now, that's glaring more for the 6E. For natural gas, we're also getting some signals, and we will go over this in our rooms if people would like them, on corn, the New Zealand dollar, so the 6N, the yen, so the 6J, and also on gold. So those are ones that we are paying attention to. We're giving out these three as they seem the most clear for the week ahead. And if these help you, if these videos have been helping you and the levels you're able to apply for yourself, then please like and subscribe so you don't miss any of our videos. For the week ahead for the ES, we are looking for rotational price action between 60.63 and 61.64 3/4. Our pivot is going to be 61.08. If we get over 61.64, our targets are 62.30 and 62.66. And under 60.63, we will look for 6,007 and 59.78 as our low end. Our low end has been moving higher each day. And be sure to check in with our daily videos so you know where the line in the sand is to be prepared and be the most prepared in the market. Have a great weekend, everybody, and we'll see you on Tuesday.